record here.
Recording in progress.
Okay. Thank you for reminding me. I'm always not good at recording my classes. Okay, so I was trying to show you something. So this point, okay, so this point is a high, right? Let me put a line there. Why is it a high? It's a high because I have this candle and this candle to my left, and then this candle and this candle to my right that are lower than this high. Okay, these are the theoretical knowledge. Let me put it that way. This is the theoretical knowledge. Now look at this low. This point is a low. Why? Because I have this candle and this candle that are higher than this center wick, and I have two other candles on this side that are also higher than this center wick. So this is a low. So even if you don't know anything in Forex, let's say you don't know nothing in Forex, and you are able to just see this condition, just take a buy at the close of this second candle to the right. Because when the market is moving and it's creating these highs and low, it's giving you an opportunity to buy or sell. At this point where the market created this low and it closed 1, 2 to the right, a smart trader will just come at the close of this candle and say buy. And if that smart trader is, patient enough to wait for this market to move to this top here, that is 350 pips in 10 days, because this is daily chart. In 10 days, the market moves 350 pips. For somebody that took that trade with a one lot position, that's approximately $3,500 profit. Okay, for this currency pair. Let me to sisters. Let me to sisters. Let me come on, let's come on. Hold on, mommy. Thank you. Thank you. Okay, sorry. Okay, so I was saying, so whoever is smart enough to have taken this trade from this point will make this much profit, right? So I want you to look at this market. Look at this market critically. From this point to there are some points that you just see that the market will just run, really, really fast. Right? There are some points you see the market will be hesitant. But then you see from here to here, you start looking for that opportunity where the market created, resistance, support, resistance, support, resistance, support. So the market will always move from resistance to support and from support to resistance. Okay, now that is not, I'm not talking about trend right now. I'm just telling you raw market movement. This is what the market does. And this thing that the market does is simply fulfilling what we have discussed here. It's simply fulfilling this price swing movement. Okay, so once the market has completed the price swing, what the market will do is to repeat the price swing. But now repeating the price swing doesn't mean that I will come and start from here. Now, this your A now. This your C will now become your new A. This your B will now become your new, this your D will now become your new B. And then you will now wait for the market to go and create a C again. That C will be at a point that is higher than this A. This is your new A. So the market will continue to do this, just like we have on this what do you call it? Just like we have on this screen. The market will continue to do this until it gets to a point where it changes direction. Okay, and when it changes direction, it starts doing this same thing down until it changes direction again. So there are conditions that the market will meet, and you will say, this market has changed direction. But remember, remember, we are also dealing with time frames. So the same way the market is doing A, B, C, D on the lower time frame, is also doing A, B, C, D on the higher time frame. So each of the time frame, on each of the time frame, the market is doing A, B, C, D. Each of the time frame. Okay, so on daily, the market is doing A, B, C, D. On weekly, the market is doing A, B, C, D. On monthly, the market is doing A, B, C, D. So now, if a smart person, we know that all this market will take off from one point, right? Everybody will take off at the same time. Both the monthly, the weekly, the daily, the 1 minute, the 1 hour, everybody will take off from the same point. But you know what? Each of them will start getting to their B and C and D at different times. If a good example is something like this, let me bring back that chart. Bring back that chart. So let me just okay, let's move it to the current chart. This is the current chart. Control B, Control A, so this is the current chart. This chart is daily. This is a daily time frame. Okay. Now we can switch this chart. We can switch this chart to 4-hour time frame. We can switch it to weekly time frame. We can switch it to monthly time frame. We can switch it to any time frame. Now, what I'm saying, if this is monthly, right? So this is monthly. Now, from this monthly, this is the highest in this movement. This is the highest place the market go to. From this highest place, the market start coming down, right? Now, this was the highest place the market got to, and from this highest place, the market start coming down. This is another highest place the market got to, and from there, it started coming down. Now, what I'm saying is, at that time when the market got here to this point, okay, and it started coming down, both 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hour, everybody started coming down the same time, right? Even though all of them start coming down the same time, they are all respecting the rule of the price swing movement in the market. So this is monthly. If I switch this monthly to weekly, we'll see this price. I want to look at this price. Let me take it back to monthly again. Look at this line. This is the price. 1.12775, right? When I switch it to weekly, you will see that price there. So this monthly, and this weekly, they both commence from this point, right? Now, look at the monthly. The monthly has only done 1 candle, 2 candle, 3 candle, 4 candle, right? But now, look at the weekly. That same movement on the weekly is 1 candle, 2 candle, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 candles. This one is for the weekly. Now, in the same vein, if you go to daily, you will see that. Sorry, excuse me. I didn't sleep, you will. Go. No. Sorry. Okay, so on this daily, on this weekly, if I switch this weekly to daily, you will see there are even more candela movements. So let's bring it down a little bit. Look at it. So you see there are plenty movement. So now you will see that in this daily, the daily has moved, let's say 1, 2, 3, 4, 5, 6, 7, 8, and then it created a bullish candle. It came down again, created a bullish candle, came down again, created a bullish candle, you know. So it just keep doing that. Meanwhile, on the weekly, I'll not do that. We don't have this again. Please not do that. Sorry, guys. Okay, so on the weekly, yeah, we are still looking at this price, this level, this 1.12775. Okay. From this 1.12775, this market came down. But I just want to show you the behavior on the weekly coming down, okay, and how it relates to monthly, how it relates to 4 hour, how it relates to 1 hour. Now, if I compress this chart down the more, you see on the 1 hour where it's coming from is very far. Look at it. Very far. Why? Because you need multiple 1 hour to make up daily, and multiple daily to make up weekly, and multiple weekly to make up monthly. So most times, this is where the complication, comes from in the market in terms of trading. So many people, they find it difficult to relate with these time frames. Okay. But you know what? In this class, there's a topic we'll take. Once we take that topic, how the larger time frame controls the smaller time frame. Once we are done with that topic, you will see it clearly. Why the market, do what it does, basically. Because inside the daily, I usually give, an example using the mother and the child. Okay. The mother, the pregnant woman, has the baby inside of her, right? And usually it is where the mother go to that the baby will be at a particular point in time. If the mother decides to move to the west, that baby will be in the west. If the mother decides to move to the south, the baby will naturally gravitate to the south because the baby is contained inside the mother. So in the same vein, the 1 hour is contained inside the 4 hour. The 4 hour is contained inside the daily. The daily is inside the weekly, and the weekly is inside the monthly. So overall, the market will go in the direction of the monthly chart. Wherever the monthly chart is going, that's where it's going. And if you have a yearly chart, a yearly candlestick, the market will go in the direction of that yearly. So for instance, this is daily. And I want to use this daily to explain to you between daily and 1 hour. So inside this daily, there are 24 candlesticks that makes up this daily. Okay, in terms of 1 hour. These are 1 hour candlestick. If I put the daily separator, you see the vertical lines. Each of these vertical lines is 1 day. So this is the first candle for this day. And this is the last candle. This is the last candle for this day. A new candle will open today by the time the market will open, maybe around 10 or 11. Okay. A new candle will start from here as the first candle of tomorrow. It's going to open here today. So from this point, this place I call the first candle to this place, I have 24 candles. So if I put my mouse here and drag it here, drag it to this point, can you see 23 there? The first letter represents the number of candlestick. Okay, you are seeing 23. So this is what makes up 1 day. Now the whole of this, now if I switch it to daily, it's just one candlestick. Only one candlestick. Just this one candlestick. That's what it is. This one. Let me put a horizontal line there. This candlestick is everything you see here. One candlestick. Now you will see that inside this day, this was on Friday, last week. This is our Friday. So Friday started from here, and then did a little bit of movement to the upside, and boom, the NFP news came in and the market crashes down. Why? Because the dollar gains strength. Okay, so this is Euro versus USD. Because the dollar gains strength, the USD has so much strength to pull down the Euro. Okay, and that was why this market came down all the way. Now, so this candlestick that is called daily, even though it opens from here, it opens from this point, right? And if you look at where it opens on the 1 hour, you see it's here. Okay, even though it opens from this point and the market attempts or try to want to go up, this is inside the 1 hour now is telling you that the market wants to go up here. So you now, you believe that the market is going to go up. But the daily, like the mother that is carrying the child inside of her, say, no, even though I open from here, I'm not going to close, above here. I'm going to close below here. So the daily decide that, okay, I've opened from here and I want to close here. So the daily came and closed here. So everything the 1 hour was doing the whole of Friday, trying to go up or trying to go down, eventually came down because the daily decided to close down. So this candlestick, this daily candlestick is a what? It's a bearish candlestick. Why? Because the opening is higher than the closing. We said it in our last class that when the opening is higher than the closing, or when the candle closes below the opening, we say that candle is a bearish candlestick. And if the candlestick closes above the opening price, we say that candle is a bullish candlestick. So the candlestick for Friday decided to be bearish. So irrespective of what the 4 hour may have done or what the 30 minutes may have done, it's none of his business. The daily is going to close bearish anyway. So everybody goes bearish, everybody goes south. So you that is trading 30 minutes and say you want to just make quick money, yes, it's possible you enter the market here and the market has even done, from where the market opened, the market has even done about 12 pips. The 12 pips all the way up, giving you some hope that the market is going to, buy. And then the next thing, it came down 87 pips. You see that? So why did it come down 87? It came down 87 because the daily candlestick decided to close bearish. Okay, so it's very important that you, as a forex trader, you understand this concept. So when we are teaching, we tend to use line to represent what we are doing, but you need to be able to relate with it in terms of candlestick. You need to be able to see it from the perspective of candlestick. Candlestick is the most important instrument as far as trading is concerned. Candlestick is the most important instrument. You want to make sure that you understand it in depth. Okay, so if we understand our high of resistance and also we understand our low of support, then our life is easy. Okay, but now in the forex market, you are going to be having multiple lows, multiple highs, multiple support, multiple resistances. So where the problem is how do I know that this one is the strong one where the market is going to buy or sell from? How do I know that the market is going to break this one? Now, it is simple to know. If the market is trending up, if we go back to that uptrend like this, if the market has decided that is going to trend up, take note, all your resistances will be broken, while all your support will be holding. You see that it never comes back to the support. This is a support. This support did not come back here. This support did not come back here. This support did not come back here. And that's why I say it's a higher low, higher low, higher low. So the market will be continuously to be going up because what? Because the supports are holding. Meanwhile, the resistances are being broken. So this is the resistance, higher high. When it got here, it breaks it. This is a resistance, higher high. When it got here, it breaks it. This another one, it got here, it breaks it, came here and break 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 it. So you need to have it at the back of your mind that if the market is breaking the resistances, it means that the market is trending up. And vice versa. If the market now start to break the support, it means that the market is trending down. So once you know this, to a large extent, you know where the market is going to. So if I've analyzed this market and I've seen that this market is going up, I'm not going to be doing anything other than be waiting for when the market breaks this high level and see the market will pull back there and take a trade. There's such a thing as past resistance becoming future support, and past support becoming future resistance. So if the market has broken a place before, the market, see here, the market has broken this place before, the market can come back to it and use it as a support. Let me go to the chart and explain it better. So let me compress this chart a little bit so that you see what I'm talking about. So having compressed this chart, you agree with me that everything you see on the chart, these sharp edges, you see the sharp edges. Let me take out the grid. Okay, sorry, take out the separator. You see all these points, these sharp edges, right? They are resistance. Why? The ones from the bottom, they are support. Now, take the instance of this market movement from this up here all the way to this down here. When this market started coming down, right? You see all this support, this area, this is support, right? All the supports are being broken. Are you seeing them? This is support, break. This is support, break. Anywhere you have support, you see that it is broken. Why? Because the market is coming down. But if the market is going up, anywhere you see resistance, you will see that the market will now start breaking the resistance, Okay? So when the market is breaking the resistances, we see it as an instance of the market what? Trending up. And when the market is breaking support, it means the market is what? Trending down. But from our study, you see that this price swing is the most important thing for you. Once you're able to identify the price swing, you'll be able to tell when the market is going to start that movement to the upside. And when the market finish that movement to the upside, you also be able to tell when the market is starting the movement to the downside. Because when the market creates a support, okay, when the market creates the support, yeah, A, and then come and create B, and then come and create C, and then the market now comes and break above B. What we are saying is that this market can come back to this level again. And at this point, this B was what? Was the resistance. When the market comes back to this B again after breaking it, this B will become what? A support. This is what we refer to as past resistance becoming future support, or past support becoming future resistance. That's what it means. Okay, so it's very important that you understand the concept of support and resistance and being able to identify them in the market. So in this case, we've been able to identify A, we've been able to identify B, because A is 2 candles to the left, 2 candles to the right that are higher than center week low, and B is 2 candles to the left, 2 candles to the right that are lower than center week high. And then we're not going to look for that condition again as this market is coming down. Boom, when it got here, the market did 2 candles to the left, two candles to the right that are higher than center week low. So we say, oh, because we are seeing this condition and it's higher than A, then this is our reversal. This is our reversal. This reversal now allows us to take a buy. We take a buy here. When we take a buy here, it depending on where this place is coming from on the Fibonacci retracement level, we can decide to set our take profit. But let's even assume that we have not talked about Fibonacci. We don't know Fibonacci. We just want to enter this market. Now we enter this market and we want to ensure from when we enter that we will only close our trade when we see a resistance. Can you see that this market started moving from this point and keeps going, keeps going, keeps going, keeps going, keeps going? This is the first time that we saw a resistance. Two candles to the left, two candles to the right that are what? Lower than center week high. So the buy that we took from here lasts the whole of this period until this point, and then we close the trade and said what? The market has created what? A resistance. Is it clear? Are we getting the message? I need to get some feedback.
It's very clear. Understood.
It's going complicated, but no problem.
Is it complicated?
It's going gradually. It's sinking.
Okay. Don't worry. This money, you people must make this money. Oh.
Amen. Yes, sir. We'll make it.
All right. So that's just so as simple as it is. This is what it is, right? When you hear the word support and resistance, this is what it is. You must see this condition where you have two candles to the left and two candles to the right, either lower than center week high or higher than center week low. These are the two conditions. Then now, after that, what you see is now the application of these conditions in the market. Okay, so these conditions, when they present themselves, just to do a little bit of explanation to that, you know, so this is your B, this is your A. Just to represent it for you on the chart, we put the number there. This is one candle to the left of B. This is two candles to the left of B that is lower than this center weak high. This is 1, 2 that are lower than this, telling you that this is what? This is a resistance. It's high of resistance. Okay. Then this point is now what? We have two candles to the left, two candles to the right that are higher than center week high. So this is what? This is a support. Support. So from this support, because this support is higher than this support, you will buy. You will buy. It's telling you that the market is going to go up. And when the market starts going up, the market is going to...
I did like that too. Seriously, you don't believe me. That's the funny thing. You don't believe me. Am I that bad?
Somebody's talking, please. Somebody's talking.
Okay. All right. So when the market breaks this B level now, okay, that is what gives you, so some people, what some people do is they say, when it gets to this B and the market breaks it, they quickly enter the trade. Okay. The disadvantage of that is that, I mean, it's a natural phenomenon that when the market breaks above a support or a resistance, the market will naturally come back to test it. Okay. So that's why you see this market now. It has broken this point B, but you see the market went up and it's coming back towards that point B. So when it comes back to that point B, and then you now see a support, it gives you confidence to what? To buy. So that's when we say past support is future resistance, and past resistance is future support. Okay, so basically, this is what the entire concept of support and resistance is all about. Now, it's a different thing. It's a different thing when we start talking about the wick and the body of the candle. You see now, when we're talking about the high and the low, now we are referring to just the wick. We're not talking about the body of the candle. Okay, but now, the space between the wick and the body of the candle is a zone. We call it a zone. You saw that indicator I put on the chart that time. It shows you a zone between the wick and the body. So the price, the area, this area where the market will do a U-turn and start going back, it's not just a single line. It's like a band. Okay, let me go back to the chart and use it to explain it to you. So let me zoom this one out. Zoom this one out. Okay. So this is what I'm saying. This week and this body. You see that? In between this week and this body, that's the length of this week, is what we regard as a zone. A zone. I can decide to remove this week. You won't see this week at all. I can come here and say colors, turn the bar up to none, turn this to none, and the week is gone. There will be no week again. Can you see that? So now when you remove the week, what you are seeing is the true candle. Now, the reason why we have to do it this way is this. Every broker has the ability to manipulate the market, but they can only do it with the wick, not the candle, not the volume of the candle. You remember, if I put this my mouse here on our last class, we talked about these 3 points. We talked about this time, we talked about open price, we talked about high, we talked about low, we talked about close price, and we talked about volume. If I put my mouse on this candlestick, it will show you those characteristics. The time, the open price, the high price, the low price, the close price, and then the volume. So if you see this volume of this candlestick, this candle, look at it. When I put it here, you see a value there. 133865. That's the last value. Look at this place. The value that is here, volume, is 13633,865. That's the total transactions that happen on this candlestick. Okay. But if I apply the wick, on it, so if I come here now and I say bar up black, bar down black, it shows me the wick. You can see can you see the wick? This black shadow-like stuff, right? So this week, in some instances, different broker has a way of manipulating it. Now, another broker, this week might not be here. This one may be longer than this point, or it may be shorter. But you see this body is not easily manipulated because it's a volume. It's the total transaction that happened there. So most likely for all the brokers, it will be the same. But the week can change. Now, usually why the week change is there's a possibility that the broker wants to take out those that are amateur traders, from the system, and then move the market, in the direction where it's supposed to go. Because this is Forex market, the broker cannot manipulate. So if I open GBP USD, this is FSTM. If I open this same chart, let me open it in AvaTrade, for instance. So if I say log into trade account, give me AvaTrade. This is AvaTrade. Okay, and I say it's the same GBP USD, right? Look at it. It's the same GBP USD. Okay, but now there's a possibility that this week here and the wick of the one of FSTM are not coming from the same price level. There's that possibility there. Because sometimes this price, this market, let's say this is our trade, and let's assume that FSTM this week did not get to this place. Now, while you are taking another trade and you decide to say, oh, I want to put my stop loss above this level, okay, and because the wick that you are looking at is wrong, you may put your stop loss at the wrong point, and the market will come and take it out and still go your way. So most times, the most accurate to use in terms of support and resistance for me is the body of the candle. Now, I don't want to remove the wick, because if I remove the wick, I may lose the essence of the analysis. So I leave the wick, but I put most of my consideration on the body. So I say this body, this is, instead of me to say that this is the highest point now, I will now say this is the highest point. So if I apply that my 2 candles to the left, 2 candles to the right, I'm not going to be applying it to this level, not this level. Okay? So just like here, look at this place now, this is down. I come here and I say, sorry, this is the body. Okay? This is the body of the candle. And I say, I want to see 1, 2 to the left, and then I want to see 1, 2 to the right. After I see these 2, I will not take my trade, say buy, but I will make sure that my stop loss is below this wick here. This will be my stop loss. This will be my entry. Somewhere here will be my entry. Let me move this line here and say this area is my entry. Then this place is my stop loss. And then this market goes up all the way like this. Okay? So even if you just use that concept, this market now that sold like this now, do you know that you would have entered this market at the close of this bullish candle, this one, at the close of this one, you would have said sell, because why? This is my up, this is my resistance, right? And then I say 1, 2 to the left, lower than this point, and then I have 1, 2 to the right, lower than this point, and then at the close of that 1, 2 to the right, I say sell the market here. As soon as I sell the market there, the market drops down with what? 90 pips. The market drops down with 90 pips. This was on Friday, this last Friday. 90 pips. Now, you may not be able to tell that, oh, this is what is going to happen, right? But me, I'm telling you that if you spot this, take the trade, most especially when you spot it from an area of resistance or support. You spot it from an area that you say, so when we say area of resistance or support, what we mean is that, so this area is resistance. This area is resistance. Okay, so let me even make it simpler for you. When you see a candlestick, okay, let's make it a little bit more interactive, right? If you see this candlestick, now this thing I'm telling you now, maybe other people may have taught you Forex, but they probably have not showed it to you like this, the way I'm telling you now. Maybe what you know before now, for those of you that are already trading, is that, oh, this is the resistance. This is the resistance, right? The wick. That's what they used to tell you, that this is the resistance. But me, I'm telling you that no. Look at it. Look at this place where I put this my line now. Naturally, one will say this is the resistance, right? And look at this body. This body this one, this body here, you can see that these two, they are higher than this one. So if I remove the wick from this candle, my resistance, okay, let me remove the wick so that it will be clearer to you. Let me remove the wick so that there will be no wick. Let's deal with the body. Okay, let's deal with the body for clarity purpose. So now no wick, right? So now, can you agree with me that this place here, so one way for you to identify that the place is a resistance or a support is when you see a candlestick to the up, that is a bullish candlestick that is immediately followed by a bearish candlestick, you have a resistance. And if you see a bearish candlestick that is immediately followed by a bullish candlestick, you have a support. Hey, talk to me if you understand what I just said. Talk to me on mute. Anybody can unmute and speak.
Please just repeat one more time.
Yes, sir.
Let me repeat it again. See, when you see this bullish candlestick, this green color is the bullish candlestick. It goes up. Then immediately preceding that bullish candlestick is a bearish candlestick that comes down from the same level where the bullish candlestick closed. A bearish candlestick comes down immediately from that point. That point is a resistance. And if you see a bearish candlestick that immediately is preceded by a bullish candlestick, that point is a support. Now I've taken out the wick. Now, if it's a support, watch the next set of candlestick. It's not going to just be bullish, bearish. You see, bullish, 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 then bearish. This is a support. Now it came down, 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 boom. This is a resistance rather. Then this is a support. And then it goes up, boom, followed by this black. This is a resistance. Okay, I just want to use it to depict to you, I mean, so that you know where the true resistance is coming from. You know where the true resistance is coming from, where the true support is coming from. So now, usually, because this place is the resistance, now when market comes back to that area, start looking to see if you are going to get resistance from that level. Okay? You just start watching if you're going to see resistance from that level. So there are different ways to do this. So now this resistance is followed by another resistance here. I just want to use line to depict it to you, and it's followed by another resistance here. Okay. Okay, before I come into this, let me take you back to our lecture material so that there's something I need you to get from this place. So the same thing, we just take the opposite of what we have explained for the bull, for the bear. So bear want the market to go down. So when the market is doing lower high and lower lows, the market is going to go down. So, and I said that when the market is going down, the market will be breaking the support, breaks the support. When we say break the support, this is the support. The market came here, it breaks below it. This is a support. The market came here, it breaks below it. This is support. The market came here and breaks below it. So every time the market breaks a support, it's a further movement to the downside. Okay, just like you have for resistance that we talked about before. Okay, so it's important for us to understand this concept. But then there's also a beautiful part of this story that I want you to know, and that is tracing the support and resistance. So I believe that if you understand the resistance, of course, this is the opposite of what we discussed when we talked about resistance. The A in this case, the A in the case of sell is a high, the B is a low, the C is a high. But if you turn it around for bullish, the A is a low, the B is a high, and the C is a low. So why for bearish, the A is a high, the B is a low, the C is a high, and then the market will fall. Okay, so just to put some light to it, we talked about finding resistances. How do we find resistances? We are looking for center weak high. So now this is the market. When we stand in front of the market, we want to see all the resistances. This is what I'm trying to show to you now. I just say, let me come to show you on the slides, and then I'll go back to the chart. So you see all these dots that you are seeing. The dots under are support, the dots above are resistance. So all these dots you are seeing, they are all resistance level, right? So when we see this resistance level, if we are looking at the market from the current, this is where the market, the market moves from the left to the right, right? So this is the where we stand in the market. If we are looking into the market, the resistance that you can see, the ones that you can see, they are the valid resistances. The ones you cannot see, I mean, look at it like a wall. Look at this market as you are standing here, as you are looking into this. Let me go to the next slide, I'm sure it will explain it better. Yeah. If you are standing here and you are looking to your left, you will be seeing all this green. Are you seeing this green color? 1, 2, 3, 4, 5, 6, 7. Now you will see this arrow C's, from arrow C's to arrow 1 or arrow 2. If you stand here, you can see them. It's like a staircase. It's like you're looking at a staircase, ascending a staircase. That's the way it looks like. The ones that you cannot see, they are not necessary in your analysis. The ones you can see, the ones that are within your line of sight, they are the ones you consider when you are doing your analysis. The ones you cannot see, which are these ones that are behind here, you don't need, just forget about them. Not that they are not useful, they are useful in terms of looking at past support becoming future resistances, but they are not valid, they are not recent. Okay, when we talk about support and resistance, we talk of time in terms of interval, and there's such a thing as recency. How recent was that resistance formed? The most recent ones are the ones you can see with your eye, standing in front of the market, looking to the left-hand side. Once you stand in front of the market, look to the left, all the resistance you can see, like in this our chart now. If we stand here, where the market is right now, the ones we cannot see, we don't want to consider them. Okay, so if I stay here, if I start from here, I say, oh, I can see this one. You can see that because this one is higher than this one, I can't see this one again. My vision is blocked. My line of sight is blocked, at this point. So this is where I can see to. I can see this one, right? I can see the next one. So once you put it, just be dragging it down and see which one is the next one is going to touch. I can see this one. Look at it, this one. So all these ones that I cannot see, they don't contribute so much to my immediate analysis. Okay, why? They are past. So the same way, in this same place I'm standing, I'm looking at the market, I have identified the resistance. I can also identify the support. So this is a support. This is a support. This is a support. And then the market is currently sitting on one support right now. Okay. So this is the way the market works. When the market breaks this support, this very one now that is on, it has not broken it. Okay. Let's see, maybe the next candle that is going to come today. Because see, if the market does not break this support right now, this market can still go up all the way. If the market does not break this support, the market will go up all the way, get here, break this one, get here, break this one, get here, break this one, and it's still going. And as it's going like that, if I zoom the market down, we are going to see, okay, so we can see this, we can see this. Can you see that? Let's just see the highest place we can go. You can see this. I think that's the highest we can go. After that, we won't see again. Okay, so let's bring it back. So this is the level we can see to. So when we put the chart, beautiful. So right now, from where the market is, where we are standing, this is what we can see. We can see this resistance. 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 And then we can see this one present. Then for support, we can see this. 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 And lastly, we can see this. Okay? So these supports that you can see, these are your areas of consideration. These are the areas you use for your analysis. I don't know if you guys are getting me. These are the areas you use for your analysis. These are the areas you consider. So for this market to come all the way to this point, it means it needs to break this one, and this one. Then you can start thinking of coming to this one. And now the natural thing, the natural phenomenon in the market is that if the market breaks a support, this support we are talking about now, what I'm showing you right now, these are horizontal support and resistances. We also have what to call the dynamic support and resistance. So if I take a trend line and join this support to this support, this is a dynamic support and resistance. Okay, this place that we are is a dynamic support and resistance here. Okay, now I can also come pick this one from here and draw to the next one right here. Okay, this is dynamic support. Now the market has broken a dynamic support and is presently sitting on a conventional support, that is horizontal support right now. This is where the market closed last week. So it's going to continue from here this week. Okay, so this is just to give you a bird eye view to why the market, does what it does. If you are considering just the week, you may miss it. Okay, that's why it is good for you to consider the candle, consider the body. Okay, or you can decide to consider both the week and the body at the same time. But me, preferably, I consider the body because I see the body as the true high and the true low. Okay, so for Euro USD, if the market open today, it's either because now the market has broken this dynamic. So this line, this slant line that I draw, we call it trend line. I will call it dynamic support or resistance. That's the name. Okay, dynamic support or resistance. So the same way I have horizontal support and resistance, I have dynamic support and resistance. So the market, when the market stays on top of a trend line, you say the market is trending what? Up. When the market stays below the trend line, you say the market is trending down. You get to do that. There's another topic. There's another complete model for that. Okay. So this is how you deal with support and resistance. So if you come back to our presentation, we said the resistances that you cannot see with your eyes, they are not useful to your analysis. They are irrelevant resistance and support. While the ones you can see with your eye from where you are standing in the market, those ones are useful to your analysis. Those are the ones that you want to concentrate on. So what you do, you observe when the market gets to those points and see the reaction of the market. When the market gets to those levels that you see, you see how the market reacts. Based on the market reaction, you will know exactly what to do. You will know whether you are going to buy, you will know whether you are going to sell. Okay. All right, so I just want to finish this slide. I think we're almost at the end of the slide. So the same thing for support, find the support and resistance. The supports that you cannot see, The ones you can see, they are relevant to your analysis, and the ones you cannot see, they are not relevant to your analysis. And in the case of resistance, if you are standing in front of the market, you look back into the market, your resistance is like ascending a staircase, while your support is like descending a staircase. I showed this before, okay, for resistance. I say you look like you are ascending, you are climbing a staircase. While for support, it looks like you are coming down the staircase. Okay. All right. I think that is clear. So when you draw the support, this support now that you are seeing here, S1, S2, S3, S4, they become your valid area of analysis. Okay. So this one now is using wick, but I tell you the best to use is the body. Don't use the wick, use the body. The body will give you the most accurate result in terms of the true high or the true low. Okay, I think that's okay. So our past support become future resistance, our future support become our past resistance become future support. We've already talked about it, right? So this is a resistance. The market breaks above it, and the market comes back to it, and it becomes support. Can you see that? This is a resistance. Resistance. At this point, it acted as resistance because it moved the market down. It acted as resistance because it moved the market down. And then the market breaks above it, it came back to it, and then now it's acting as a support in moving the market up. So we can say past resistance can become future support. Past support can become future resistance. Okay? So from this lecture, from this lesson of support and resistance, your take home can be that what you just want to see is past support becoming future resistance, or past resistance becoming future support. You just go to the chart. You just go into the chart, and without too much of analysis, you are just looking for let me take away all these lines. Okay, take away all these lines and just say Control A, delete all. Okay, so you know that this. So let's look for a typical example that really shows how past support becomes future resistance. I'll just backtrack the chart a little bit so that you can see what I'm talking about. And I want to use the body. Okay, beautiful. I just seen one now. I don't know if anybody is seeing what I'm saying. Look at this place. This is what? This is past resistance becoming what? Future support. At this point, it was resistance. It brought the market down. Then the market came, break above it, and came back to it, and it became future support. And the market decided to buy from there. Can you see that? Does that make sense? Is it clear? Okay. So,
yes, it is.
so this is a crystal clear example. So as a trader, you can just decide and say, I don't want to trade anything in the market except past support that becomes future resistance. It's up to you. It's your choice. You know, there are phenomena that occur in the market. Some are rampant, some are not rampant. Okay, some occur quickly, some don't occur quickly. So if you say you want to be trading only past support becoming future resistance, you need to wait. Like this one now, this market that came here and create this candlestick that you are seeing, the name of this candlestick is called pattern. It's called a piercing line pattern. So because this is a resistance, the market breaks above the resistance and came back to that resistance and formed for you a candlestick pattern called the piercing line. It gives you like 80 to 90% assurance that if you buy the market, it will go in your favor. That's what it tells you. Okay, so if we go back in time, we'll see more. See, I just seen another one again. Look at this one. This is a support, right? This is a support becoming what? I'm sorry. This is a resistance becoming support. In the same way, look at this place. This is a resistance becoming support. Look at it. The market breaks this resistance, came back to this point, and it becomes support for the market to go up. It breaks this resistance, okay? It breaks this resistance, rather, sorry. It breaks this resistance, came back to this place, becomes support, and the market takes off. This thing is not rocket science, trust me. It's not rocket science. Anybody can do it. Imagine that all you have to do is to wait for this to happen. And you decide to, just to make it look like an ideal situation. You know, most of the things that we teach when we try teaching with materials will look like ideal situation. But now, let's say you did not see this one. Tell me, won't you see this one? Won't you see this one? Look at this one. Let's look at this one. The market breaks this point, and then it came back to this exact point, and then it gives you a candlestick formation, and boom, 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 you buy. Can you see that? This is past resistance becoming future support. This is past resistance becoming future support. In case you don't know, this movement that you are seeing from year to year is $3,300 profit for somebody that is trading with one lot. This movement from year to year, this is $3,500. This one is in 14 days. Let me see how many days was the first one. The first one was 16 days. Okay. And if we go like that all through the chart, you are going to see plenty of it. Plenty of it. It is always occurring. Always occurring. Always. You see them everywhere. So let's say your work does not give you time. Look at this one. Look at this one that is so glaring. Look at it. Look at this one. Look at it. Can you see that? Here is a support. And then the support was broken and it became resistance to sell the market. You imagine this fall. Imagine this fall. Let's say you sell the market from here. Let's assume you sell the market from here. Now, how many pips is that? From here all the way to this down, this is 690 pips in 36 days. 1 month and some few days with one lot, that is $6,900 profit. And if you take it with 2 lots, that's going to be like almost $14,000 profit. All you needed to do was to see that this was a support in the past. And now in the future, it becomes resistance, and you sell. And you stay there. You see, you can sell the market from this candle, and you can put your stop loss right. What I will tell you to do is to put it right on top of the big candle of this past support. So I come and put it on top of this place. Yeah. So from here to here is 180 pips. So I risk 180 pips and I make 690 pips profit. What's that ratio? Do the ratio for me. How many ratio is that? Risk to reward ratio.
About 1:6.
1:6. That's a lot. That's a lot. You see? So this is one entry strategy in the Forex market. What I'm telling you now is what is an entry strategy. And when you are doing that, when you are doing this, it's also important, like for instance, because there are a lot of support resistance everywhere that will confuse you. I want you to deal with the one. I want you to take the one that is very, very obvious. You know, something very obvious. See, like this one now. Look at this one. This is a support, right? Now look at this place. It became resistance. Very obvious that is in between here. In fact, look at it. It's even 2 times support. It was support here, it was support here, and then boom, it become resistance here. It even makes it more valid. When you are taking the trade at this level, let your stop loss be above either this candle or this candle. So let's say we put the stop loss here. Okay. So exercise for everybody. Everybody. Okay. You have seen what we've talked about. Now, I want you, when you go after this class, for those of you that are already trading, go and try your hand on this thing that I showed you. If it doesn't work, come and tell me. If it doesn't work, come and tell me. You don't need to do anything. You don't need to break your head too much. Just ensure, just like as I looked at this line, I said, I removed the candles so that it will not be confusing. Remove the wick. If I put the wick back, I can put the wick back so that you see the wick. You can still do it with wick, but in order not to confuse, you can take away the wick. But let me put the wick back. Put back the wick. So I say bar up black, bar down black. Okay. Oh, sorry. I went and canceled it. So bar up black, bar down black, and then you say, okay, so you'll be seeing the wick. So the wick is there. Now, because of the wick, most times it's confusing for you to actually see this support. Bearish candle down, followed by immediate bullish candle. This is a support. Now you are not, all this place now, you are not doing anything. You are just waiting for the market to come back to this place. And the market came back to this place, and the market gave you a bearish engulfing candle, confirming to you that of a truth, this place is what? Is support that has turned to resistance. Can you see that? It didn't break it, it didn't go above it, it just came there, right there. And then it gave you a candlestick formation. And boom, the market starts selling. You see that? Now we can go on, and we can go from currency pair to currency pair. We can go for different currency pairs. It's crystal clear. Okay? So let's ensure that we make use of this knowledge. So before we close this class today, right? Let me see if my slide has ended first. Let me be sure that I cover the slide completely. I think that's about the last slide. Okay. Yes, that's the end of the slide. This slide is what is the game of support and resistance. We started it last week, right? And I said in my post that we are going to finish this slide. And when we finish this slide, we are going to do something. We are going to work on your tool, okay? That tool with which you trade. So in the next 30 minutes, before we round up this class, let's look at the MetaTrader, okay? The tool with which we trade this market is called the MetaTrader 4 or the MetaTrader 5. All right. MetaTrader 4 or MetaTrader 5. Okay. It's a free tool. But I will use my own account to explain to you. This is my own account. This is my FSTM account. Let me refresh if it's still active. Oh, okay, I think it was closed. So let me log in. So for those of you that are not, trading yet, or you have not opened account yet, you can follow. I will just guide you through the process of opening the account. But let me see. This. Okay. Login. Verification successful. So let's log in. Confirm you can see my screen, because I want to delve into something very, very special.
Yes, can see it.
Yes, we can. Yes, I can.
Okay, thank you very much. Thank you very much. Thank you
Yes,
very
I
much.
can see it.
Okay, so this is my account. Okay, this is my FSTM account. So I want you to, it's just like this account is just like your UBA account or your Zenith Bank account. Okay. Inside your Zenith Bank, you can have your name, your email as your parent, ID. And you can create multiple other accounts inside your account. So you can have a current account, you can have a fixed deposit account, you can have what is it called, savings account inside that your name, right? So this general space that you see, this is the FST. When you go to FSTM, when you go to FSTM, let's say FXTM. So the FSTM login. When you come here, you see this place, and you say open account. Okay. When you say open account, it will give you. Let me even see if I have this on my dashboard. Dashboard, FSTM, that profile. Let's see. User profile. Verified. Gmail, subscription. Okay, so when you open the account, we are going to come to all this, but I just want to see, you see all these are verified. Your TIN number has to be verified. Everything has to be verified, right? And then when your account is verified, it will carry this verification confirmation that your account is verified. Now, what it means is that you can do business with FSCM. You can trade with FSTM. You can do anything with FSTM. Okay. So basically, when you go to this open account, when you click on this open account, it will give you a page. Me, I already have account, so it will not allow me. But any of you now, if you go to fscm.com/register open account, you're going to see a page where you will fill. After filling it, we ask you to put a 4-digit code that is going to send to your phone number or your email. And then it creates an account for you. When it creates the account for you, it's going to come to a page like this where we give you this ID. You must get this 8-digit unique ID. So once you have the unique ID, that's your account ID. So once you have the account, you are now going to come to platform. So I want to first of all explain each of these tabs for you. So it is the same for every broker. Okay. For every broker is the same thing. So you just come to open a new account. Then since you have created this your parent account comes with 4 accounts. Okay, so if I come to, let me show you those 4 accounts. It comes with 4 wallets. So if you click on FSTN wallet, you are going to see a GBP account, a NGN account, a USD account, and a Euro account. So these 4 accounts are automatic. The system automatically create them for you. So you can put money here, but the money you put here, you cannot trade with it. This is not your trading account. This is just a wallet where you can keep money. And you can do internal transfer to move money from this wallet into your trading account. So your trading account, you get it by coming to my account and you say open account. Okay, when you say open account, FSTM has crashed all their servers into 2 servers. and they are called advantage plus, advantage, and advantage plus. Okay, for advantage, you have MT4, you have MT5. For advantage plus, you have MT4, MT5. The minimum amount you need to open this account is $200. Minimum. You cannot put below $200. Okay, so if you want to open this account, you can use this $200. That doesn't mean that your account must be in dollar. When you are opening the account, so I'll just do an example. Say I want to open an account. You will choose the currency you want the account to be. So if I come here and say I want to open an MT4 account, I click on open account. It will give me a space to select currency. Now you can decide that you want your account to be in euro, you want your account to be in dollar, you want your account to be in pounds, or you want your account to be in naira. If you select naira, that account, this your $200 now, they will give you the exchange rate equivalent. I think it's like used to be like 80,000 or so, but now with this new exchange rate, it has changed. So it has changed to 350,000 naira. Okay, so your $200 now is now 350,000 naira. So this is the minimum you can use to open an account in FSTM today. Okay, so all you need to open the account is come here, select your leverage. Don't do more than 1 to 500. 500 is okay for you. 1,000, 2,000, 3,000, they are killing. So go to either 200, 300, 400, or 500, maximum 500. Don't go beyond that. Then you come here, you select a password, put the same password here, and then you click open account, and it creates an account for you. When you finish creating the account will now come and appear under this account overview. Click on account overview, you will see your account. So these are my accounts. So this one is a naira account. Okay, presently it's about 1.5 million naira that's there. This one is a dollar account. Presently it's about $535 there. This one is MT5. So this is MT4, and this is MT5. This MT5 is naira. So I normally maintain one MT4 naira, one MT4 dollar, one MT5 naira, one MT5 dollar. Then this one's below a demo account. So if you just want to open demo account to play, you can go back to that place and say open account. You click on open account. You come to try demo. Okay. So if you select MT4 and you say try demo, it will give you MT4 advantage. If you come here and you select MT4 and you say try demo, it will give you MT4 advantage plus. Okay. Now the difference between advantage and advantage plus is right here. Platform MT4 and MT5, here you have pricing, competitive, commission across FS, spot, betas, currency, cryptocurrency, CFDs with tight spread as low as 0. While here, 0 commission and tight spread. So this is the difference between the two platforms. Now, for the MT4, you have, limited amount of things, of asset that you can trade. While for the MT5, it's almost unlimited. The amount of items you can trade is much on MT5 as compared to MT4. Okay. But the two platforms, they are basically the same thing. The only difference for me is that MT5 appears to be faster than MT4. But MT5 has some disadvantage as compared to MT4. Because MT4 was the first introduced, developers, coders, programmers, they tend to have more indicators in MT4 as compared to MT5. Okay, because now you at some point you will know that you will not just trade this market without indicator. You get to a point where there's also a topic I'm going to teach you guys that is called indicators, right? You get to a point where you need indicator to also guide you. So for instance, we have indicator that tells you the market is trending. Now, what I'm teaching you in terms of price range is for you to know how the market trend, right? But there's an indicator I will just put on the chart, and it will tell me if the market is trending up or is trending down. So if I come here and I choose trend indicator. So they come automatically. When you download this platform, it will come automatically with it. So you have trend, you have oscillators, you have volumes. So if I say these are the indicators that help me to identify that a market is trending. And the most used among all of them is the moving average. So if I just come here and click on moving average, and I say moving average 50, okay, exponential, and I say apply. So when the market is above the moving average, it means that the market is buying. When the market is below the moving average, it means that the market is selling. So you can see how long this market has sold from when the market breaks below the moving average till date. Now, see how beautiful this one is. This is the same place. This is the same place that we talked about past what do you call past support becoming future resistance. Past support becoming future resistance. This is the same place we talk about. So look at it. In this case, in this scenario, and that will make your life easy, is I have this place as past support. Okay, I have here as past support becoming what? Future resistance, right? So I have this place as past support becoming future resistance. Now, you will see that it also tallies with the moving average. Look at the moving average. When the market breaks below the moving average and pulls back into the moving average and gives you a candlestick formation and the market starts to sell. Okay, so there are different ways to use moving average. There are several, and this moving average you can adjust it until you get the most used are 14 and 50. Most used 14 and 50. Okay, so when the market is above, it's a buy. When the market is below, it's a sell. Okay, so that's just to mention moving average to you. So basically, once you have done that, you will now come here, okay, platform. Click on this platform and select download platform. So these are the platform for FSTM. These are the platforms that are available. Okay, you can download MetaTrader 4 terminal, MetaTrader 4 for Android, MetaTrader 5 terminal. These are things you can download. Okay, you download them and trade with them. So these are for MetaTrader 4, these are for MetaTrader 5. Okay, so when you download any of these, as soon as you download and install, it will be on your computer. Okay, then the next thing is for you to take that account. Remember, I said when you finish creating your account, you come to account overview. All your accounts will be showing in your account overview. You pick this account number, you go to the MT4. This is your MT4, right? You come to, you can either come to file and click on open account, right? Then select your server, because that's your account. Let me show you. When you open this account has features. If I click on this account like this, it will give me the features of this account. And the features of this account will show you the server. Look at this trading server. The server is FSTM ECN0. That's the server. So when you come here and say you want to log in, you will look for FSTM ECN0. So you type FSTM. Okay. So you see FSTM. So you look for ECN0. This is it. Okay. So you now double click on this, or you click next. It will move you to the server where you want to log in. Then you carry that your account number that you have created here. You carry this account number, you copy it, say copy. Then you come here, come back to the MT4 and select existing trade account. Then you now paste that value here, and then you now type your password here, and then you click finish. Once you do that, this thing that you are seeing will appear for you. All this candlestick to appear for you. And then you can start analyzing and trading the market. But you need to take time to study. So whatever broker you are using, it doesn't necessarily that you must use FSTM, right? You can use any broker. It's not compulsory. Just 1 minute. Let me stop this share. Okay, no, let me just leave it. I just wanted to do this. Okay. So it's not compulsory that you must use FSTN. You can use any broker of your choice. But every broker platform, when you log in, you will see things like this. They may not appear exactly the same way. Like for instance, if I say log into AvaTrade now, yes, AvaTrade. 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 Okay. So this is my AvaTrade. Okay. I log into AvaTrade. It's not going to appear like FSTM, but you are still going to see some features that are similar to what you are seeing on the FSTM. Oh, why you taking time, man? Be fast. Okay, while AvaTrade is opening, some more exciting things you need to know is, so one, we'll talk about account, and the two things you see in account is how you open a new account. When you click on it, you see this opportunity to open a new account, and then account overview, it shows you what you already opened. So all this account, now these are trading account. Look at it. My trading account is different from my wallet. You know, it's different from the wallet. You cannot trade with the wallet. It is only money that is in your trading account you can trade with. You can decide to have plenty money in your wallet and take small part of it to trade. Okay. Then my money, inside my money, you can see a history of all your trades, history of all your deposits, your withdrawal, your internal transfer. You can see them here. Then you can see here, your conversion rate. So if I click on conversion rate, for instance, for FSTM, if I just go to Naira, so NGN, it means that this is the rate FSTM is. If you fund dollar or Naira to your FSTM account, this is the rate they will use to collect it from you. And if you are withdrawing after trading, this is the rate they will use to collect it from. This is the rate they will use to pay you, 1457. Why they take 1467? Okay. Then your wallet, I've talked about that. Your withdraw fund, you can see the options of withdrawals that you make. So FSTM, they've updated their system. So if you withdraw with Nigeria Mobile Bank, it takes 30 minutes for the money to enter into your account. So if I place a withdrawal right now, in 30 minutes, I'll see that money in my account. Okay. Then you come to documentation. Yeah, these are the things that you need to submit after you open the account. So you verify your account. They'll ask you to verify with a proof of address, which is like maybe a utility bill or a statement of account. Then proof of ID, you can use your driver license or any of the government issue ID. Voter's card, international passport, they are all acceptable. Then your TIN number is also required. They will require your TIN number at some point. Then trading service. So for trading service, FSTM run 2 signal services. This one is signal center by a company that is called Acuity. Acuity is a big company that provides signals to brokers. They don't provide signals to individuals, they only provide to brokers. Okay. So if you have a broker that is sharing Acuity signal, you can see them here. These are their signals. Because the market has not opened, so the signals are not appearing for you, but you can filter the signal. You can decide to say you want to see only buy limit, and it will show you only buy limit. You want to see only set stop, it will show you only set stop. You want to see only live trade, it will show you only live trade. Once the market open now, it will come online. Then the second signal service they run is the FSTM trading signals. So this one, some FSTM have some selected pairs. FSTM have some selected pairs that they provide signal on a daily basis. I think they issue this signal twice in the day, once in the morning and once in the evening. So any currency you select here, say S&P 500, this thing is not working because you're supposed to be seeing value, maybe because market is not open. But it used to work. I don't know why it's showing like that. Okay, so you see the entry a price. It will tell you what is the say is selling. Okay, that will tell you the price to enter, the price to come out of it. Okay, so that one is a free service that you can use. Then next part, I want you to take, cognizance of is education. When you click on education, you are going to see webinar, workshop, ebooks. First is the ebook. Come to the ebook. These are books that are written by FSTM education experts. This is for NASDAQ 100 trading guide. You can download it, it's free. This is how to trade cryptocurrency, is free. This is FSTM media market report, is free. Cryptocurrency free. Bearish candlestick is free. Bullish candlestick is free. Then I think they have about close to like 10 books here. You can download all of them for free and you can use them. Then the next thing you want to look at is the webinar. So from time to time, FSM organize webinars. Okay, so even if you miss the webinar, you can come here and go to past webinars. So if you scroll, they have a lot of past webinars. It's a lot, right? From when I started using FSTM, in fact, it is. So this is 2018. It goes as far back as 2017. Okay, so you can come here. So a lot of them are not showing the way they're supposed to show right now. But for instance, there's one guy, Conrad, used to work with FSTM, but it's no longer with FSTM. He was the one that developed this trading strategy, riding the trend. So if you just come here and watch this video and you apply it to your trading, you will make money. Okay, this riding the trend is a very powerful trading strategy. So I would advise you, if you are using FSTM, go and watch it over and over again, and you see what you can make out of it. All right, so these are what are available to us on the FSTM platform. So when you finish downloading this, the next thing is to master its usage. You need to be able to consolidate on using the platform. Okay, so you need to ensure that you understand how to use it, and understanding how to use it is understanding all these tools that you are seeing here, understanding all this tab, everything here. You need to understand everything you are seeing here. You need to know what it means. Like this now, this is the time frame. This is your special tools. You can pick your line tool, shape. Maybe I want to draw a triangle. I just pick it and draw 0.1, 0.2, 0.3. You draw your triangle. You want to draw a circle, you can pick it and draw a circle. You want to draw a rectangle, the same thing. These are your special tools. Okay, and you can add and remove. So if you right click on this place and click on customize, you can select the tool you want, you can put and you can remove. So if you come here, if you click on remove, anyone that is highlighted will go to this way. If you click on insert, anyone that is here will come to this way. Anyone that is showing here is what you are seeing that is appearing here. Okay. Anyone that is showing, once you right click, anyone that is showing on this selected, these are the things that are showing here that you are seeing. Anyone that you don't need, you can remove it. Take for instance, this auto trading, I don't want it. I'll just scroll and go to auto trading. Come here, right click, customize, then look for auto trading and click remove. Once I remove it from here, it will disappear from that up there. Can you see that? It has disappeared. If I want it back and I click auto trade there and say insert, you see it has come back there. Okay, so you can determine what you want to see. Wow, you see the market just opened with a big gap down. Can you see this? A big gap down.
Yeah.
Wow, telling you that the USD is still strong. Still very strong. Wow. Okay. We'll see how it pans out this week. So now when the market gaps down like this, naturally, what normally happens is that the market will want to come and fill the gap. Okay. So now when it gaps down like this, instead of you to just jump in and say, oh, the market is selling, you need to wait and see if the market will come and close this gap before it eventually goes back down. Okay. Because most time people will just jump in, and when the thing is trying to close that gap, they will not be at a big loss and they'll be running eta scatter. So when you see things like that, you need to be careful. So all these things are general knowledge, that you need to have in order for you to be able to trade in the forex market. Okay. So I think we will stop here today, and we hope to continue from here next week Sunday. Okay. Or if anybody have any question, let's take your questions. Anybody want to go first? You can go. Let's take your questions.
Good evening, sir.
Good evening.
My laptop and
Sir, I
charger.
want to say thank you so much.
Welcome.
This time my laptop. The charger is going to use it now. Hey, but I'm not charging it right now. Hey, don't.
Okay. Any question? Any question? Is there anything that we are not clear with? Do we all understand support and resistance? Do we all understand that when we see support, the market will buy? Do we all understand that when we see resistance, the market will sell?
Yes, I understand that.
Perfect. Okay.
Yes, sir. Yes, sir.
Right. Okay. In the absence of any other question, we'll close this class and hope to see you guys next week. Thank you very much for attending.
Oh, thank you very much. It was very enlightening. Thank you. Well done.
Thank you very much, Prof.
Yeah, thank you.
Thank you.
Thank you so much, sir.
Thank you very much.